Welcome to Tradecast, the podcast where we provide expert insights and share actionable tips and strategies to help you improve your trading skills. Join us as we navigate the complexities of the markets and uncover the secrets to successful trading. Hello everybody and welcome back to another episode of Tradecast. We've got a very interesting episode this time round because we're interviewing somebody who, me and Darwood, they trade options and stocks, and it's something we're not massively familiar with. Although we might know a little bit, but it was like a really interesting chat and very insightful. So how are you doing, Darwood? You all right?
Yeah, I'm not doing too bad, to be honest. Just been very busy the past couple of weeks. What about yourself?
Yeah, same. I was away on holiday last week, so I had a nice week away.
I saw you were on holiday the last time we spoke as well.
It's
It's a lot of holidays, bro.
It's all them hoochie cooch 3-pip stop loss setups. No, we were just talking about this. You see traders on Twitter all the time, and it's what was it? It was like basically like a support line, wasn't it? And it had like cooch on it.
Yeah. Basically, like SMC comes up with new stuff every month. Like after speaking to BOFO, like you see all these like actually profitable and big traders trading like very generic stuff like flags or just support and resistance or breakouts, and then you go on Twitter and you see a trader who's a self-claimed billionaire being like, "Oh, I trade the Cooch pattern," and you're like, "What's a Cooch pattern, man? Like, where have you got this name from?"
The cooch
Um,
pattern.
yeah, man. So to be honest, it's a very good episode. Because I learned a lot from it, and I think it's very different to the way a lot of people trade and to the way that trading is marketed.
Mm-hmm.
Um,
Certainly different to how I trade. There was a lot of stuff in there. It was just like I didn't have a clue.
yeah, yeah,
Yeah, very
but
interesting.
definitely interesting. Like,
Yeah.
how's your trading been going?
So I mentioned in the last episode that I just got a funded account. Pretty
Yeah.
much standard, get a funded account, straight in a drawdown.
Mm,
And had the week off on holiday, came back, had a really nice trade yesterday. Luckily made the losses back, a little bit of profit, but yeah, other than that, pretty steady going, just ups and downs. Been quite quiet this month, I'd say. It's not been a great month by any means. How about yourself?
yeah. To be honest, I had that one week where it was really good. I was probably the best trade in my career. And then the week after, obviously, go on like a straight losing streak. I had, I think, three trades. All three were losses, but only one was a full 1 hour loss.
Mm-hmm.
So I'm still up for the month, but like I mentioned to you before, I've just taken sort of a week or two off because I've noticed over the years when I do have a really good week, I don't know what it is about my personality or my character or my way of trading. I basically always end up going on a losing streak, and
Mm-hmm.
it's not like a losing streak that's in my plan or anything. It's just really silly when I look back at it. So while I'm trying to find a solution for that, if there ever is a solution for that, I found the best way is to literally just take a week off and then go back with a very fresh mindset.
Do you know what I think your problem is?
What do you think it is?
I think you need to stop using 3-pip stop losses.
See, but the issue with that is right. The trade which actually works out with a 3-pip stop loss just covers up everything else. But
Yeah, that's
obviously,
true.
I'm not going to show all the losers. I'm only going to show the winners, so people think that I only hit insane trades with 3-pip stop losses.
I think that's what everyone does, isn't it?
Yeah, most people, most people.
Yeah.
But sometimes I'll put one loss in a month, maybe, just so people are like, yeah, this guy's definitely being real, because people are
1.1 hour
starting to
loss.
clock on now. Yeah, basically, because people are starting to clock on now. Like, you can't win all trades, so you
Mm-hmm.
have to show them one loss here and there.
Yeah. So what's been going on in the world then? I know there's a topic that we were going to talk about, but then we decided just to wait until we're on mic. So I'll let you
That's
start with it.
submarine, man. It's just ridiculous
Yeah, it is.
what people are doing, man.
The thing which has annoyed me so much is like I've literally seen it everywhere for the last 2 weeks,
Yeah,
and it's like a group of 5 super wealthy people go down a submarine, which they knew the risks of, and
yeah.
it's literally just been like every news platform I've looked on that's been at the top.
Yeah, I mean it has been everywhere in the news, and if you want to be a bit cynical, I guess, um, like there were reports that the U.S. Navy or Coast Guard or whatever actually knew that it had imploded on the Sunday, the first day, but they didn't tell anyone. And to be honest, that sort of makes sense because if you think about it, right, they will have had to know something was down there, and if it imploded, they will have had to have known that it imploded because imagine like it's got the America's got the biggest army in the world, right?
Biggest
There's no
navy in the
way,
world as well.
yeah, there's no way they don't know what's happening in their ocean because if they didn't know that, a country like Russia or whatever, I'm not an expert, but surely if they don't know what's going on there, any country could just send a submarine down there, and
Exactly.
they wouldn't know. They could just get attacked like that, and all of a sudden, they're in a war. So I feel like they would have known, and apparently the reason they didn't tell anyone was so it would take the headlines, so it would take away from quite a few things which were happening in America. Now this is where it's like a bit tinfoil hatty, but like I don't know if you've heard of like Hunter Biden.
Is that
Apparently
Joe
the
Biden? Joe Biden's son? Or
yeah,
yeah.
yeah, and there were like things released about him and things going on in court about him at the very same time. How convenient, right?
I
So
did see. I
that's
did
what
see
they
something
say.
about that. There was loads of other cover-ups as well. I seen. There was like a huge thing. Do you know the whole Jeffrey Epstein case?
Yeah,
Apparently, J.P. Morgan had also wiped like loads of files related to Jeffrey Epstein, and that was sort of like conveniently at the same time. I know you say tinfoil hat, but like it might it
actually,
might it
yeah,
might have just been a coincidence, but it does sort of seem a bit of a coincidence.
yeah, yeah. I mean, speaking of that, something which I really laughed about a lot earlier was the US had an accounting error or a rounding error or something of 6.2 billion.
Yeah, I've seen
Um,
that.
a few days ago, just before Russia gets in a civil war, and the people attacking them is a private army for hire, and you're just thinking, what an accounting error that is! What a time for that to happen.
Literally, that whole thing in Russia has been mental as well. I thought that was gonna like explode into a lot more than what it has, but who
Yeah,
knows? Who knows what's gonna happen? Apparently, the Wagner guy, he's been able to move over to Belarus, which I don't know. Obviously, Belarus is pretty much controlled by Russia, isn't it?
yeah,
So I don't know how safe he's going to be or how safe the Wagner soldiers are going to be. But I literally thought, I
yeah. I
don't
mean,
even
it's a
know,
bit
mate.
odd. Surely, like if you think about it, if I'm a leader of an army and I go against Putin and he made a claim saying, "Oh, Russia's gonna have a new president soon," and if
Uh,
I say that and then I start marching to Moscow and I take over cities where there are millions of people, right?
mm-hmm.
Surely at that point you have to commit because you know Putin, and he's not just going to be like, okay, they stop attacking me, I'm just going to let them go, right? Putin is just not going to do that. So it's very strange for the guy to be like, okay, we're not going to attack you anymore.
I
It's
know
very
what,
odd,
mate.
isn't it?
Change my mind. Change my mind.
You know what? Take my mind. Oh, you're not going to kill me. Great. Like Putin is not going to just let that go. I don't think. Um, so it's a very strange scenario. What's happened there? To be honest, like.
Well, I mean, you know what they say. It's good to put things in the past behind you, you know?
Oh yeah, because I bet you Putin really, really will do that.
Yeah, definitely. We'll see the Wagner guy. He'll be dead in a few months.
Yeah, all of a sudden he's just dead. His whole family is also just dead.
Fell out of a
Uh,
window. The whole
bro,
family fell out the window.
they died of coronavirus, man. They weren't vaccinated.
Yeah.
No, that
But
submarine thing though. Going back to that, like I, some of the best like memes I've ever seen have been from that submarine event, man.
I've seen a
I've
few today. Somebody showed me some today.
I can't remember last time I laughed that much, man. So you know what? They're bringing joy to everyone,
Uh,
which is a good thing.
and the thing is, though, just after that happened, I think Richard Branson had announced that he's going to be sending, it's like a similar sort of thing, but instead of to the depths of the sea, it's to the depths of space. Have you
Oh
seen
wow!
that Virgin Galactic?
No, I've not seen
No,
that.
it's basically, do you know how he's doing that? It's like a flight, so it costs hundreds of thousands of pounds to be able to go in it. But
Yeah.
basically, he's just announced that that's going to be like coming into fruition soon.
Oh, okay.
Perfect timing, if you ask me.
Yeah. I mean, I wonder what could go wrong with that.
Literally, yeah.
You know what I found stupid? Yeah,
What's
how it
that?
was bolted from the outside.
I know. So once you're in, you can't get out.
Yeah, whose idea was that, by the way? Because who's like, I've got an engineering mindset, and I would not do that because the only reason for doing that was in case someone inside wanted to open it while they were in water, which you can have measures against anyway. And the
Hmm.
amount of pressure you'd have to push to open it is just ridiculous.
Yeah.
So if anyone tells me, "Oh, you're gonna go in this, and the only way to open it is from the outside," I'm not stepping in that thing whatsoever, and I'm telling the guy to change it. Because imagine, right? Imagine they managed to float, yeah, and now they're floating on the top of the ocean.
Uh-huh.
And they will have been seen if that did happen. But imagine they're floating and no one like noticed them, and so they're at the top, okay, but they're still going to run out of oxygen because they can't open the thing.
Uh-huh, exactly.
It's just stupid, man.
So even if they did recover it back to the surface, there would have been another job in itself just even opening the thing to let them out.
Yeah, yeah. There's no way they were surviving that.
Nah. So anyways, how do you think the chat went with BOFO?
I quite liked it, to be honest. Like I
Yeah.
told you earlier, it was quite different. Like I've got a few trading friends, and sort of the topics we speak about and the sort of trading we speak about was very different to
Hmm.
what he had mentioned. So it was almost like a click or a reminder that
Yeah.
hang on, there are actually traders out there who like trade completely differently, and it was nice to sort of know what still links you and what you're still different with, and just how broad trading is in general. Because I don't know about you, but a lot of the trading education that I see, especially in the UK, is very focused on one thing. So
Yeah.
it makes you think, okay, there's only one way to trade. But I really realized how broad trading is and how many ways you can trade and still make money. Like there's no right way to trade, there's no wrong way to trade really, as long as it's making money. So
Hmm.
it was quite good, and he was quite knowledgeable.
To be
Uh,
fair, I've never, like, I don't really hear of many short-term scalpers in the UK.
Yeah, yeah. I think a reason for that though is just the sort of brokers available.
Yeah,
Because,
true.
like I mentioned to you, when I tried to get into options trading, there was IG, I think, who or IB, sorry,
Hmm.
who offered options trading, and you could test their platform out beforehand
Yeah.
with sort of paper money, because it's a very big change to what I normally did. So obviously I wanted to sort of test out trade execution and stuff, and it
Hmm.
was only them, and I didn't really like their platform. And then the others were like, they were very small and they hadn't been around for very long.
Hmm.
And then on top of that, you need a massive upfront investment of capital. Whereas in America, um, they have, I think, a lot more brokers who are offering that, such as like Think or Swim, which is
Hmm.
what I really wanted to use. So I think it is just more openly available there, which is part of the reason. Um,
Yeah, but anyways, it was a class episode. He was a really nice guy to speak to as well. Seemed
yeah,
very genuine, and these results are pretty impressive. And if you go check him out on Twitter, you'll be able to see him for yourself. But yeah, it's insane, really. Especially he hasn't been training that long; it's quite a short period of time. But I don't want to spell any more of the episode because I feel like I'm
yeah,
just
yeah. I'd say just before we get into it, my biggest advice would just be to go in with it with an open mind, because I assume most people listening to this will be from the UK or will be trading forex. I'd say just go into it with an open mind, and if what you're doing in trading isn't working for you, then I'd say this is definitely a viable option.
absolutely. So, without further ado, everybody, enjoy the episode.
Tradecast.
Today we're joined by BOFO. First things first, I was just wondering if you could tell us a little bit about yourself, about your background, and how you became interested in trading.
Yeah, sure. I used to do, well, I guess I still do real estate. I'm kind of a consulting guy for healthcare real estate development. That was my 9 to 5 job up until 2020. And in 2020, I had a nasty wrist injury. It happened right about the time that the pandemic, started shutting everything down. So all of a sudden, early 2020, I was working from home every day, and I also had this huge cast on my arm. I couldn't do anything, so I really didn't have much exposure to the market prior to then. But sitting around having nothing to do and working from home kind of made me start researching a little bit, and I just kind of dove in and never looked back and kind of caught the bug. So I've been trading since 2020. I went full time February of this year, and I still do a little bit of real estate on the side, but trading's my main gig now.
Mm-hmm. How was that transition going into full time? Was it smooth, or have you had like lots of ups and downs, or?
It was pretty smooth for me because since I had been working from home, and I continued to work from home even after the pandemic kind of passed. So I traded every day. And I gave my notice to my company last November. And, because I was on a small team, I needed to give them a lot of time to replace me, which I did. So by the time I went full time in February, it had been coming for 4 months or so, and I'd kind of gotten my head ready for it. So it really wasn't a bad transition for me at all. And I kind of hit the ground running, making good profits, and so that kind of gave me some confidence as well. And I had saved up enough to feel comfortable, not like I needed my profits to live on anytime soon.
How would you sort of describe your trading in the sense of what do you trade and what time frames do you trade and sort of what does your trading day or trading week typically look like?
Uh, I am an active momentum trader on small caps, so I've got scanners, and they keep me up to date on what the high volume runners are in small caps for the day. And so I trade on the 1 minute and the 5 minute, very actively in and out all day if things are hot, kind of like today. And I reference the daily, I reference the hourly, I find my levels and pivots there, and so I use those things, but I'm primarily a 1 minute, 5 minute guy.
Mm-hmm. Just back on that point when you were first getting into it. So how did like your close friends and family, etc., how did they sort of react when you were like, I'm quitting my job and I'm going full time into trading, which is something which is not like really new, but kind of quite new?
Yeah, my family knew what I was doing. They knew that I was passionate about it already. I mean, it was all I talked about, even while I was still working for multiple years. And then I also kind of shared with them what my track record was, and how I wasn't just gambling, and how there was systematic about how I was going about things. And I had a few close friends that felt the same way. The close friends I have that understand the market, to them it's something really cool to do, to go full time. So they're supportive. I don't think anyone really thought I was crazy. It's the fringe people that don't know you and how much work you've put into it that kind of raise an eyebrow, and they think that you just are like a GameStop gambler, and that's really not what I am, or what any of us that take this seriously are.
Yeah, I think people, it's kind of like the iceberg effect. Like people only see people once have like reached that level. They don't actually see all the hard work that's beneath it, sort of.
Right. Yeah.
So me and Dor would primarily trade like Forex and CFDs, DAX, S&P, etc., stuff like that. Understand that you primarily trade penny stocks, is that right?
I have gone through spells where I've traded a lot of pennies. You might still consider what I trade pennies. To me, I would say that they're the stocks that are under a dollar. So I trade, stuff that's from $1 to $20 too, and that's primarily what I'm looking at now. But I did go through a spell earlier this year where I traded a lot of pennies. It was just where the opportunity was in the market, for the kind of trading I like to do.
Obviously, the trading education is very broad, but I feel a lot of it is concentrated onto perhaps one way of trading or one style. So I'd say the way you trade and what you trade is quite unique. So how did you sort of get into that and learn that way of trading?
Yeah, I and I don't know if this is like a country thing too, because we have no commission brokers, which make it really conducive for me to be able to make a lot of trades, and I don't have to worry about commissions and so on and so forth. And so I know I've got some friends that aren't in the US that's not really the situation for them. It doesn't make as much sense to make as many trades as I do in a trading day. So what happened for me was I just kind of went on a Google search at the very beginning and was trying to find, like who to follow just to learn about the stock market. And I found names that people have heard of, like Zach Morris and so on and so forth. But there's a guy that came up on one of those lists named Trading King Eric. And he had a Discord room at the time called Royalty Trading. And so I joined it and I made some friends. And that's kind of the trading that they did. They traded momentum names. And, back in 2020, because there was just so much liquidity in the market, some very obvious patterns played out really cleanly, like ascending triangles and, things like that, and small caps. And so, we just kind of learned to buy the support line on a triangle and sell it when it broke out with volume. And, I think a lot of the people that I still trade with and talk to on a daily basis today, that's kind of where we came from, and the way that we trade has evolved from that.
Mm-hmm. So apart from stocks, have you ever dabbled in anything like futures or options or any other sort of asset class?
Yeah. So the first year or so, I experimented with a lot of stuff. I tried options. I tried swinging. I didn't get into futures at that time. I did do that a little bit in the past year, but it didn't really work for me as much. My other stuff was working better, so I didn't put enough time into it. But it gave me a baseline understanding of a lot of vehicles. And so, it's kind of coming full circle now, because now that I'm full time, what's really heavily on my mind is compounding my gains. And in small caps, there's only so much liquidity. I really don't want to have the lifestyle for the longevity of my career where I have to sit at the computer and click buttons all day. So I'm really putting a lot of brain power into coming up with new ways to snowball my money systematically and grow what I already have on size, things like that. So the way that I'm doing that is I'm looking into selling premium on options now, and my base understanding of options comes back from 2020, when I tried to do that day to day for a little bit.
Mm-hmm. So when you say selling premium options, would you be able to just explain sort of what you mean by that, just for people that aren't familiar with it?
Yeah. So, a lot of people trade options. A lot of people, buy calls when they think stock's going to go up, and, buy puts when they think a stock's going to go down. And they'll do the 0 days till expiry. That's kind of the hot thing right now because of all the volatility. But, the vast majority of options expire worthless. And so I'm building a strategy around that statistic, that they mostly expire worthless. And so what I'll do, there's the Greeks, right? So if you buy a put, you are agreeing to sell a 100 shares of a stock at the strike price. It's confusing for me to say it because I have to think backwards because I'm selling it, and if you buy a call, you are agreeing to buy the stock at the strike share price. And so when I sell a put, I am agreeing to buy, one put contract equals 100 shares. So I'm agreeing to buy that stock at the strike price at the time of expiry. And so if the stock goes up, the value of that contract goes down. So, this whole time that the market's been ripping up and I've been selling puts, I didn't have to own any shares. I'm just selling puts. Those are all expiring worthless. If I have a $200, or if I've sold a $200 put on Tesla, let's say, and here we are at 250, the chances of that coming down to 200 as we get closer to, let's say, this Friday, if that's my expiry, is going to get less and less. And so the value of that contract gets less and less. And eventually you get to that date. And once that date passes, if it's out of the money, which if it closed here at 250, it would be, then that's that's a zero that expired worthless. It's worth $0, and I sold it to somebody for a value. So that's the idea is I'm selling these contracts, and knowing, expecting, hoping that they expire worthless at their expiry date.
Is that what Warren Buffett did quite a lot of when he was in his early years, from what I remember?
It could be. I'm not one of those guys that's like read Warren Buffett's biography or anything like that. But it could be. I mean, a lot of people do it. I mean, I think I guess surely retail traders do it, but it's not as flashy and sexy. It's not like a day trading tactic really. Like I'm usually selling expiries that are about a month out, and so I just got to sit and wait. It's more of like I said, for me, it's a compounding strategy. It's a variation of a swing strategy, really.
Yeah.
So I was just wondering, would you be able to kind of like share some insights into like your research process and like what key factors you consider before you would enter a trade or buy a position or?
Yeah. I'm a technical analysis trader. So I'm trading the chart and I'm trading volume and I'm trading the tape in level 2. And so for me, every morning I'm looking to see what stocks have gotten news in the morning, how much volume they're getting on that news. I'm going back and I'm looking at the higher time frames to mark significant levels on my chart. And then, sometimes I'll trade a little bit pre-market. I like to do market orders, and so you can't do market orders in pre-market, and so I don't like pre-market as much. But then after the bell, I am watching those significant levels. I'm listening to my scanner. I'm seeing where the volume is going. Where's the herd of traders going in these small caps? Because those of us that trade small caps, we're usually on the same names. There's a reason they're getting all this volume, because traders like me are the ones, paying attention and buying and selling these. And so, technical analysis behaves the best when there's high volume. And so those are the ones I want to stick to. The types of setups that I like to play are flags on a significant level. Like let's say we have a high volume push up to high a day or just under high a day or a significant level, and then we get a low volume pullback to a support level. That is a high quality setup for me, especially if I've got my 8 EMA or my 20 EMA catching up either on the 1 or the 5. I really like those. That's the gist of how I do it. I like to watch order flow, and so I've got my eyes on the level 2 and the tape, and so I want to see bidders refreshing. If they get sold into, I want to see new bidders stepping up. If they break an ask level, I want to see new bidders following through, new orders below to support price moving up. That's bullish to me, and I'll join with that. So I'm very active. It's very reflexive to me, and I'm not good at researching fundamentals of companies. I don't like going on to FinViz or Yahoo Finance or anything and looking at their earnings per share, or like researching their catalysts or any. I hate that. That is not suited for me. I like trading almost like it's a game. I like the skill of it, and I like the reflex of it. And so that's why I'm a short time frame trader, and the way that I trade does not require me to do a lot of research on these companies. In fact, most of these companies, I don't really know what the company's called or what they do when I trade them.
Sort of when you're trading or building a strategy, as you mentioned before, do you sort of look at statistics of that strategy and gather statistics? And if you do, what sort of statistics do you gather?
Yeah, I do. I use TraderView. That's my journaling software. I've used it for pretty much since the beginning of my trading career now. And it's easy because I can export my executions from my broker and upload them into TraderView. And it will kind of break the trades down for me. You can put tags in there and setups in there and manually go in and say, oh, this was a flag setup, this was a ascending triangle setup, this was a false breakdown reclaim setup, or whatever it is that you're tracking. You can do that yourself. I do so many trades a day that it doesn't make sense for me to do that. So I use the statistics that are already built into it, and that's going to be like, what time of day are you making your most profits? What time of day are you taking your most losses? What price range of stocks are you most profitable on? What price range of stocks are you least profitable on? Things like that. It even correlates with, how profitable are you on a up day in the market versus a down day in the market? And you can have long and short, and it does a calendar for you as well. So those are the kind of things that I pay attention to. I probably look at it every couple of weeks or every month or so to see if there's any notable trends in my trading. For example, I think in the last month or two, I was finding that, the 10 to 11 o'clock hour was like the only hour consistently that I was like red. I was profitable in all other hours of the day, but this 10 to 11 o'clock, I wasn't. And so that was, I can take that and I can kind of be mindful of that as I go into the next trading days.
Yeah. So like before you even like started trading, did you kind of do any sort of back testing on your strategy, or automate it to back test it, or just generally fill out statistics on a spreadsheet sort of thing beforehand? Was it kind of just learning as you go sort of?
No, I was I was a trial by error guy. I knew what setups worked. I knew what a good 5-minute flag looked like. I knew the things that I wanted to catch. Usually for me it was poor execution. I was getting faked out, or I was, scaling profits too early when the real move was coming, things like that. And so that just took it was more chart study than it was, running statistics on the patterns or anything. Like I said, I knew when a good one looked good, and so then it was a matter of going back and looking at my trade executions and going back and looking at that chart and trying to realize, like, okay, this one failed. Can I see any other details in this chart that would kind of tell me why this failed, or, why did I miss this? What do I need to be looking for next time? And that was all trial and error. That was all, me just kind of learning from mistakes. Like I said, I'm such a dynamic and quick trader. It's difficult to say, statistically, like, oh, this setup, because for me, sometimes I'm just joining tape,
Yeah.
So
I know you mentioned that you primarily trade like chart patterns, like flags, etc. Is there any sort of indicators or anything you sort of add on to that for extra layers of confidence, or?
Yeah, I have VWAP on my 1 minute and 5 minute charts, and I have the EMAs. I like the 80 EMA, the 20 EMA, and then I also keep the 200 EMAs. I have the 200 EMA and SMA, and I pay attention to them. Like you said, they're confluence to me. If I see one of those corresponding with a support level, or if I see the chart, specifically respecting one of those EMAs, I'll make note of it. But indicators like that, they're a lagging indicator. They're not enough to base a trade thesis on alone for me.
In terms of your trading, what would you say is sort of the capital required for someone looking to get into it, and what sort of returns can they expect a month, if any?
This is a type of trading that is very difficult to get proficient at in a short amount of time. I was even talking to some of my buddies that trade the same way as I do today about, we're 3 years in doing this every single day, all day, and even now I'm just amazed at how much more understanding of things we have versus this time last year. So we're constantly improving. To day trade, we have a pattern day trader rule, and if you're under $25,000, you can only place 3 day trades per week.
Really?
And that's
crazy.
Yeah, right.
Is that
And
is that only in America they've got that? Or only
I
in the
don't
States?
know. Yeah, I
Okay.
don't know. It might be an American rule. I'm not sure. But here it's a very big rule. It is something that we, people for this type of trading, they either have to be very, very selective with their stock selection and with their entry, and they get to do it 3 times. Or sometimes people will use a cash account instead of margin. And with a cash account, you can, use all your unsettled or all of your settled funds for day trading. But, once they're unsettled, you got to wait until they settle 2 days later. And so some people will take an account and they'll use half of their cash account for Monday, half of their cash account for Tuesday, and then by Wednesday, the first half is settled again. So some people do that. If you're over $25,000 in your account, then you can trade as much as you want freely. And so, I would say, having 25,000 is good, but you really want to know what you're doing. I would recommend paper trading using this strategy until you have proven that you can be consistently profitable doing it, because it is really, really easy to just give back outsized money, if you just take cuts all day long on a strategy like this. In terms of the returns, though, if you are consistently profitable, I mean, I've multiplied my accounts multiple times already this year doing this type of strategy. It can be very, very lucrative. But like I said, because you're dealing with small caps, if you start getting into a very, very large account size, you can't always take such big size on every setup. Some of these names are thinner, and they just can't support that type of volume coming through on the tape.
I was going to ask about volume, actually. Is that, with it being like a smaller stock, is volume something that can become an issue, like quite frequently, or?
Absolutely, yeah. Some of these, the beauty of these stocks having such low floats is they move very quickly. They can make high percentage moves in a matter of seconds. But that being said, it doesn't take very much volume to make them move either. So, people can, well, I don't know about people, but market makers can fluctuate the prices on these things in just the blink of an eye. And so if that goes against you, you could take a really, really big loss. But likewise, if you're in on the right side of the trade, you can get a massive gain in a short amount of time. But just like the market makers can move it very quickly, some people have big enough account sizes that even just their buying power can have a big effect on the short-term price of the stock. And so, there are traders out there that are having that type of impact on these stocks. And so, if you're seeing a very thin name, a very low float name, you got to be cognizant of, either a market maker or a big trader. You can be a small fish in that big wave on one of those things.
So are you kind of like limited in a way to how big you can grow your account? Because once your account gets to a certain size, there's only like so much position size you can put on, and then would it be the case of you'd have to sort of like move up the stocks with a lot more volume and people are trading a lot more?
Yeah, that's exactly right. You've either got to size down for, you can kind of pay attention to what's the float, how much volume, how big are the orders that I'm seeing go through on the tape on this thing, are there big orders that are absorbing, my volume. You can kind of pay attention to that and kind of gauge like how much size can I play with on this name. But ideally, you're finding those really hot names, and even sometimes the mid cap names that can handle whatever size. I mean, I'm talking about like Carvana and AI recently. They were high volume momentum type trading names, but those have high enough volume that you've got to have a huge account to be able to have any effect on the price of those things.
Mm-hmm.
You're obviously trading quite a lot in one day, entering quite a lot of trades. So in terms of risk management, how do you sort of manage your risk on a day-to-day basis and maybe on a week-to-week basis?
Yeah. On a trade to trade basis, because I'm paying so close attention to the tape and so close attention to the very small time frames, when I enter, I want the stock to basically work in my favor immediately. And I'm someone who will add to winners if something does start going in my favor. I don't want to have big size at or close to my average, because then, like I said, these can move very quickly. And if I have big size and it goes against me, that can be a big loss. So I like to add a starter. I expect it to go in my favor very quickly. If it starts going against me, I take that small starter off for a small loss. But if it starts going in my favor, sometimes I'll add to that position, and by adding to a winner, I'm inherently adding to a position that's already above my average, and so I'm protecting myself in that way too. But the caveat there is if I add, I need to cut before it goes below my average, because I don't want that bigger size going against me. So that's kind of how I manage on a trade-to-trade basis. On a day, I kind of have dollar amounts that I take a mental note at. So if I start the day and I'm down $500, let's say, that's kind of like a yellow light goes off in my head, and I'm like, okay, like, make sure you're really taking good entries, make sure your priority is protecting risk, that greed isn't creeping into how I'm trading. If I get down 1,000, then I have to take a bigger step back, and I have to really think like, okay, is the market poor today and I'm just ignoring that there's no follow through? What is going on? Why have I, gotten down $1,000 for the day? And at that point, I probably need to size down too and let the market prove itself to me before I increase size again. For me, if I get down, if I've checked those boxes and I say, okay, yeah, I'm trading well, it's just had some poor luck or whatever, and I get down 1,500. I mean, that's kind of for me, like, I need to start going back up from down 1,500, or else I need to walk away. Like 2K is like max loss for me. So, from a week to week and monthly perspective, the beauty of the way that I trade is I take very few red days. I rarely have a red week and rarely have a red month. And so if that stuff is going on, I've got some kind of major problem that I need to address. And the way that happens for me is, if you think about, if I have a consistently profitable edge and I'm taking, hundreds of trades a day, that edge applied over hundreds of trades, well, it should come out profitable pretty much every day. So that ends up being the case. And I like that. I don't like going, if you're a swing trader, you can go through spells where you just red or you don't make any money, and I don't like that. So it kind of just suits my personality as well.
Mm-hmm. I know you mentioned previously that you use a scanner to sort of like pick what stocks you're going to trade for that day. What does that recognize? It just basically show like what stocks like a lot of people are trading on the day, like what's got a lot of volume going through it.
Yeah, it's called Trade Ideas Scanner. A lot of folks that do what I do have this scanner. It's a robust scanner. It's a very, very powerful tool, but it is a little bit complicated. It's not very user friendly because there are so many inputs that you can modify and so many variables that you can put in to have it scan for. And so a lot of us have shared these scanners that have been built by somebody who figured out what they're doing. Like, I don't think I could go in fresh and just recreate these scanners that I have, but we've kind of passed them around to each other. And I have one that shows me the gappers. And so it's sorted by the gap percentage. It's filtered by, I think I have mine filtered to stocks over $1 and under $20. And it tells me the float. It tells me how much volume there is on the day. And then I have another window, and that's my momentum burst scanner. And so it's telling me in my ear what stocks are either making high a day or halting or have a large outsized burst of momentum that came out of nowhere. There's a few things that it spits out for me. And then I have another one that is the volume leaders. And so whether it gapped big or whether it has made the biggest move, this one is telling me where is the most volume, especially related to its relative volume and relative to its price. And so I kind of keep an eye on all three of those windows to see, cross-reference them and see, like, usually the top handful on those lists are the ones that I need to keep an eye on. And those are the ones that I throw on my thumbnail charts to keep an eye on, if the patterns are setting up in any kind of attractive way.
So just on to the next point about managing like emotion and discipline. How do you handle the emotional aspects of trading, such as like fear and greed, and like what sort of techniques do you have in place to keep yourself disciplined, so you don't go over that max loss, or you're basically just sticking to the plan that you've set out for the day?
Yeah, it is very difficult. It's probably the toughest part about trading, and I'd be lying if I told you that I have mastered it. I mean, there are days where I get a little greedy, or I get a little tilty or frustrated, or my edge is not working for as sharp as it normally is for like a week or two, and that can even be out of my control sometimes, but it still can affect me and cause me to force trades and try to make things happen that aren't there. And so I would say it is absolutely the I mean, it's almost the only pitfall that I have, because I know my edge is sharp. I know my strategy works. If I could just 100% stick to it and keep that frame of mind where I'm protecting capital all the time and just looking for the perfect entry to keep my risk minimal, if I could just stay in that mindset all the time, I mean, my P&L curve would just go exponentially higher, and I would, rarely be red. I mean, that's just the truth of things. But that's very, very difficult to do, And so I read books about it, and I reflect on it, and I try to make myself pause during the day to check myself and see where I'm at. But yeah, I mean, it's the hardest thing. If my friends are having a big green day and I'm struggling for the morning, that can get in my head. It can be anything to set you off. And so I'd say I'm constantly still working on it. I mean, like I talked about my yellow light, red light system, that kind of helps me take a phased approach to it before things get too bad for me. Something that I'm doing right now, actually, I'm doing this program called 75 Hard, which is more about working out and eating well and being disciplined. And I'm someone who is so obsessed with the market that I'll sit here and I'll watch it all day, and I'll eat, sleep, and breathe the market. And so, when I underperform in the market, it can totally wreck my day or my week. My mood is bad. I can't let it go. I can't get it off my mind. What I'm finding in doing this 75 hard program is it leaves me feeling accomplished at the end of the day, even outside of the market. I've gotten other things done. I feel good about the accomplishments I have for my day, so that when I'm red or I underperform in the market, well, I still have a good day to look back on and feel like I accomplished, some good things in that day, and I moved forward in that day, even if I was red. So it kind of diversifies where my headspace is at, and it keeps me a little bit more even keel overall. And I think in turn that helps me manage my emotions on the trading side.
Would you say, was that one of the biggest obstacles you faced when you were learning to become profitable and even through your journey now? Or is there something else which sticks out, which maybe was a big obstacle that was in your journey?
Yeah, the biggest obstacle for folks early on, and myself included, is finding that profitable edge to begin with. I mean, trading is very, very difficult, and to find something that works and that you've done it enough to make it work is it takes a long time. And if you come in and you are expecting to, make a bunch of money and profit, and that's not working for you, I mean, it is very easy to go off the deep end and lose a bunch of money. And so early in my career, I made a little bit. It kind of made me really catch the bug for the market, and then, man, I lost a lot more than that before I kind of bottomed out and really kind of had to do some soul searching and decide that, like, hey, this needs to be not about making money for a while. This needs to be about putting in the work and finding something that does work on small size, small enough size that I don't really care if I win or lose. It's about proving a strategy. um, I'd say once you have that is when the emotions become the biggest challenge. Even when I was starting to become profitable, I was kind of an eager beaver, and I wanted to, put my new edge to use and size up and start making money. And when that starts going poorly, it's easy to slide and go off the deep end. And all of a sudden, you can lose 6 weeks of gains in 2 days, and that is just crushing. And so I've had drawdowns like that in my career in the past, and they've been, like I said, like, a month or 6 weeks of gains gone, and then the next time it happens it's only 3 weeks of gains gone, and then the next time it happens it's only a week of gains gone, and you kind of get better at not letting that bleeding continue. But yeah, I mean, I'd say finding the edge is the hardest thing in the beginning, but then after that, I mean, it certainly is emotions.
And I guess sort of following on from that, say someone is wanting to basically do exactly what you did, what would be your biggest sort of advice to them through their journey? And what sources of education would you recommend to them?
Yeah. My advice would be to trade on either a paper account, a simulated account, or a small size account. Now, I mentioned the pattern day trader rule, where you only get so many day trades under $25,000. If I was going to go that route, I would do a cash account so that I can use my settled funds, and I would trade tiny. I mean, I would trade, I'm talking like 5 shares, like negligible. One, because then you can use as many trades as you want and not go over your settled cash limit, if you're trading very, very small. And two, it's not going to have a big, monetary effect when you're losing, because you're going to lose. The whole process of learning this is going to be learning from your mistakes, and so you've got to make those mistakes to learn those lessons. And I'm talking hundreds and hundreds of lessons. I mean, this is not something you learn in a weekend. And so that's my advice: is minimize the drawdown while you're learning, either using a cash account or a paper account. And then as far as resources, my buddy Mikey Underdog has a YouTube channel. He's done a lot of videos, and he's one of the best traders at this strategy that I've ever seen. And so that's a really good place to get fundamental understanding of what it is and what we look for and how we do it. You can find other resources on YouTube. I'd be very skeptical of any folks on Twitter or wherever that are providing a paid service or a room where they're giving out alerts. You don't want to be a trader that follows alerts. You can follow traders that are sharing ideas, especially if you're seeing those ideas that they call ahead of time play out successfully. Make note of those and go back and study when they called it and try to understand what they were seeing and why. But I would say also, don't be a trader that sees someone say, "Oh, I like X stock," and then you buy X stock and then expect it to go. You're not going to learn anything or be a self-sufficient trader doing that. I would say that the education is difficult to find and difficult to come by, because so many people unfortunately are putting out information that's not good, or they're just trying to build their clout to sell their course or whatever. So it is kind of tricky to not be led down the wrong path when trying to learn this.
There's a lot of people that just make money from selling courses, and it's like questionable
That's right.
whether they actually make any money from trading.
That's exactly right.
Yeah. I was just wondering, would you be able to sort of explain to us like a real career-defining moment? Maybe it's like a big loss that you had, which really sort of like humbled you and sort of made you realize, like, I sort of need to get a bit more switched on if I'm going to actually make something of this.
Yeah. Let's see. I think it was June or July of 2021. I was at pretty much rock bottom. I had lost more money than I wanted to lose. I was kind of having that realization that, like, man, I need to really take this seriously and, like, really put in the work to learn a good edge. And I remember I talked to a buddy of mine who was a very consistently profitable trader at the time, and it was really just about getting my head straight. It wasn't about him telling me like, oh, you should do this strategy or whatever. He just kind of reframed how I thought about risk and reframed how I thought about taking profits and just taking little base hits. He told me, he said, first of all, he goes, I want you to do one thing. You're going to have a rule where you only buy red candles. And the point being was, don't chase breakouts. We buy dips, we buy fear. the opportunity is when you're buying fear, not when you're, chasing greed. And so he's like, only buy red candles. And two, if you were walking down the sidewalk and you saw $20 sitting there, are you going to pick it up? And I was like, yeah, sure. He goes, good. If you told me you wouldn't pick that up, then he said, F you, because you think you're too good for $20. You're not too good for $20. He goes, I want you to think the same thing about your trading. If you have $20 of profit shown on your screen, there's nothing wrong with taking that off the table. And the point there being, take your profits when you have them, buy red candles, don't let it go against you, and then take your profits when you have them. And it was amazing because just kind of reframing my mindset towards, buy dips, protect my risk, and take profits when I have them. I from there went on a 6-week green streak with not a single red day. And so that was an absolutely revolutionary, redefining moment for me in my career. Now, the the downside there was, in having a streak, I became so protective of that streak that, after that 6 weeks, I had a huge drawdown and a huge, fall from grace, where I basically gave it all back in a matter of days because I could not accept being wrong. I could not accept losing my streak. And so I felt like I had to get it back, and I had to get it back. And I was, forcing it on bigger and bigger size, gambling, trying to, get my streak back. And so, there's a pitfall on the flip side of that coin there too. But I would say that probably was the turning point in my career.
Mm-hmm. So just wondering, like, with market conditions constantly evolving and changing, how do you sort of adapt your trading approach through different market cycles? And what sort of strategies do you employ to sort of like navigate changing market conditions?
Yeah, it is difficult because it is changing so rapidly. Some people talk about seasonality of the market and, oh, summer it's this way, fall it's this way, the holidays is this way. I don't really buy into that as much. I think for especially the stuff that I do, trends, there tend to be these trends, and so you'll get like sympathy moves. So like, let's say a reverse split low float stock, for whatever reason, maybe it's a technical squeeze, or maybe there's news that just sends it and squeezes out a bunch of shorts, and it makes kind of a black swan move. Well, what can happen is that can spark a sector or a trend, and so people start looking for other low float reverse split names, and they'll start hitting those, and all of a sudden, people are like, oh, I see why that's getting hit, and they join in, and it brings this outlier volume, and you start to get, you can start to expect follow through when they start to move. And so it's paying attention to things like that. It's also, being so instinctive about what you're seeing on the tape and on the level 2. So, if I see my 5-minute flags, for a handful of days, really good setups are popping up over that breakout level, and then they're stuffing, bids are just falling out, and big ask orders are coming in and they're shoving it back down. If I start seeing that repeatedly, that tells me that we're in a weaker market. I need to pay attention to that. I need to, if I'm going to play that pattern, I need to, take my profits more quickly, take more off the table when I take profits. I become more scalp mindset. Whereas, in other markets, when there is follow through and bids are confirming the breakout levels and they're squeezing up higher and they're aggressively attacking those asks, I'm making note of that as well. And that tells me to let runners run a little bit more, not take profits so quickly. So it's kind of just, paying attention to sentiment and keeping in touch with it really closely. And it can change quickly, and these cycles don't last very long. So it is something that we've got to be very dynamic with. And sometimes I'm slow. I mean, this month I've struggled even this month because the market slowed way down in comparison to March, and I did do a poor job adjusting on several days this month. So it's difficult.
So I was going to ask, has there been like any sort of specific challenges recently then you've had to like adjust your trading strategy to overcome them? Maybe it's like a big news event or something, or like a lot of like fundamental sort of shift.
Yeah, I think it's more like what I was just talking about. So it's kind of a nice segue. It's in May, we were seeing a lot of follow through. We were seeing stocks kind of get a burst of volume and what we would call like an ignition candle. And, bids were aggressively following the move through. And so it was making it great for my strategy. I mean, I was able to take an entry. It was rarely going against me. I could even add to that winner. It would continue to go. I could take nice profits and let runners run. In June, it's not like news changed. I think what starts to happen is in small caps, when you go through a spell where these companies are not putting out very attractive press releases, it's just fluffy kind of news. Maybe they're just trying to pump their stock up to do an offering, or who knows what. If there's a spell where there's not that much good news, then I think sometimes things just start to get dry, and the bidders start to be less aggressive, and it makes it challenging for me, because sometimes these names that I play, they have a spread. And so if there's like a 10-cent spread and I'm entering and I see bids kind of coming up and we start to see what looks like an ignition candle, maybe I'm getting in, and then all of a sudden those bids can fall out, and now that nearest bid is 10 cents below your entry. Well, if you bail right there, you're taking a 10-cent loss. And so those can start to stack on you, and it makes it to where you've got to be very selective, and that can get frustrating. And then sometimes you start to force things, and then you start to let losses stack up. I mean, I think that's the biggest thing that I've had to deal with recently, and especially this month. And that's kind of how things go. I'd say we get 2 or 3 really hot months a year, and at least 2 or 3 really cold months a year. So it's protecting capital in times like this, and being okay with not having big profits that you're posting for the week or the month.
So in terms of like trading education and learning, what resources or books or mentors would you say have been, like, I know you touched on a few mentors previously, but ones that you would say have been totally instrumental to your entire trading journey?
Yeah. Well, I'm reading Best Loser Wins right now, which I think is, I really like it already so far, because it really touches on the mindset of thinking differently about the market than the 90% of people that fail in the markets. Another one that's really good is Trading in the Zone. A lot of people talk about that one. As far as practical education, there just simply is no replacement for experience. And so since I watch the level 2 and the tape and the orders so much, and it's so crucial to the way that I trade, I record my screen every day. And I try to make note of significant price action, where something that I want to catch in the future happens on the tape. And then I can go back and I can even slow down my screen record, because these things move quickly, right? So I can slow down my screen record and I can watch and see, like, okay, well, what happened with the orders here? Like, why did it, why was there this sharp influx of volume? Was there a big order that hit the tape that I missed? Did that big bid get filled by a seller, or was it a prop bid and they pulled it? Things like that. Go back and watch and study your own trades. I mean, that is by far going to be the most beneficial to you. Everyone wants to be handed a strategy that works. Everyone wants to be handed, all of this on a platter, or be able to learn it in a weekend. And it's just really not how it works. It's, it takes experience and it takes practice. I kind of use the analogy sometimes of golf, right? So like if like Rory McIlroy could give me a golf lesson, we could be on the range together and he could tell me what to do with my swing. But just because I spent, 4 or 6 golf lessons with Rory McIlroy, like, sure, that's going to be beneficial. It's probably going to help me. But can I swing a golf club like Rory McIlroy after 4 or 6 times on the range? Absolutely not. There's definitely no way. I've got to take thousands of swings myself to improve. And the same is true with trading. Someone can give you pointers and kind of tell you what to look out for, and that can help you. But until you go and just watch thousands of hours of the market to get that instinctive gut feeling about how this stuff works, you're really just not going to get there.
Yeah. As much as I'd love to keep chatting for longer, I'm aware we've kept you for quite a while. So once again, thank you for coming on. So where can everyone sort of find you?
Yeah, my public presence is mostly on Twitter, at BOFOMOMO. And I think that's where Callum and I connected.
Yeah.
So.
Now, I'd just like to say thanks for coming on, mate. It's been a really good chat, and I've really enjoyed talking to you.
Yeah, thanks for having me on. I enjoyed it.
That's great. Thank you.
Thanks.